And the U.S. China making progress on landing a trade deal. So what will a resolution mean for the Fed? That's a huge question on the table, and Steve Liesman joins us with potentially the answer, or at least a thought.
Andrew, the Fed is going to likely look at this trade deal with a certain amount of optimism and skepticism. Optimism that the largest trade relationship in the world, perhaps moving in the right direction, or at least not getting worse. But there will be skepticism that any damage that's been done will be quickly undone, and a desire to see an actual signed deal and positive impact show up in the economic indicators. Three things I think the Fed will look for: stability in the trade regime for the United States, reduction in uncertainty, and a turnaround in economic indicators that have been affected by trade. Economic policy uncertainty, as measured by the University of Chicago's Stephen Davis, running at a 7-year high, and trade seems to be a large part of it. As uncertainty has risen, CEO economic confidence has declined. In fact, most of the Trump bump to CEO optimism, it's gone, except for about 5 of 44 points. This has led to a decline in capital investment, but not hiring, not yet anyway. All this is not trade, but a bunch of it is thought to be. The question now: can a deal undo the damage that's been done? For the moment, the market is confident in an October rate hike, but has been pricing out one in December.
Thank you, Steve.
What do you think?
I think it's going to confirm what the Fed's been doing. A lot of people want the Fed to front load its policy because of potential damage. But if this can go away with a deal, or at least partially go away with a deal,
then
it's going to address the impact of it rather than front run the idea of what would happen.
The deal itself putting off the idea that the Fed would act sooner. Wait and see what happens in December?
Right. It's worth saying that if the things that are being talked about happen, there could be economic upside to it, like the intellectual property thing that would be beneficial for the United States. Some of the other issues, the currency thing. When China subsidizes its industries, it's a positive, actually, for United States consumers, depending upon what you're consuming. For example, cheap steel is good for people who use steel in the United States. Cheap goods, some people lose their jobs here in the States. But it's an economic inefficiency overall, right? So if China stopped subsidizing what it's doing over there, that would be a rise in global economic efficiency over time.